Well, we are back with Lyle Stein. He's president of Forvest Global Wealth Management for his view on politics, both in this country and south of the border as well. First of all, what are your thoughts on the Canadian political situation, which is, as Cole just told us, we're in a reasonably unique phase here right now. The governing party looking for a new leader. That leader becomes prime minister instantly and one would think have pressure to call an election almost right away.
It's fascinating between what's going on in the U.S. and now what's going on in Canada, the potential immediacy of election. You know, the reality is, as an investor, we're really interested in looking at what are interest rates going to do, what are corporate earnings going to do, we talked about those two, and then what are taxes and exchange rates going to do. Well, in Canada, we do have a revenue problem, and so taxes can't really go down. I don't know where the money is going to come from to meet the social programs, let alone a call for more defense spending, not just at the U.S. border, but in the context of NATO. Nobody was talking about that. So, you know, Canada's got a revenue issue. That's important as an investor because it then percolates into how much pressure is going to be on the Bank of Canada to offset the fact that revenues could be under pressure. In fact, more pressure if there is this tariff. So our rate differential now with the U.S. is really big. It's signaling that we're in a recession today. That's tough for the Canadian environment. So again,
is that differential going to get wider? Certainly, I think the market believes it will, that the Bank of Canada will continue cutting, and now there's significant doubt about the pace of cuts in the U.S.
Well, exactly, and the issue now is how much can we get away with without the dollar tanking? You know, it was trading, unfortunately, quite a bit below 70 cents. It rallied at the end of last week, not so much on what was going on in Canada, what's going on really in the rest of the world, the U.S. dollar, but any Canadian dollar weakness from a world waking up to the fact that, you know, we don't have revenues. We have an economy that should be doing better, but we've kind of, you know, shot that with respect to what we did with energy.
We have a big productivity problem in this country, and it's been flagged really for years. What kind of policies do you think are necessary to refire Canadian productivity?
Honestly, this is not a politically correct thing, but I wish we would have a Doge-type review of where we are spending our dollars, because a lot of that productivity is coming from the fact that we have I'm going to call it an inflated, bloated government sector, and something has to be done there. We're seeing, you know, quite incredible things coming out of what's going on in the U.S., but that's where you got to kind of cut. And if we can get government kind of out of the pockets of the people, then we have, I think, better opportunities for growth in the corporations that Canadian pensions are tied to.
Okay, south of the border, the big story, or one of the big stories is tariff threats and what that means to the North American economy, the Canadian economy, the U.S. economy, and the global economy. We began our show by speaking with David Rosenberg. He thinks this has introduced almost unprecedented levels of market uncertainty. What's your take?
I think I'm not going to say unprecedented just because I haven't studied it long enough, but no question, high levels of uncertainty. The Europeans are, you know, questioning everything today. They haven't been doing that really over the last 4 or 5 years, very much like Canada. And, you know, going back to that interest rate differential, if you look at what's going on in the UK, you look on the euro, their interest rates are going down while the US are still flat. You're seeing it all around the world where you have soft economies. So that's an issue. More tariffs are not good for inflation in the longer run. In the near term, probably even more painful. But ultimately, what's happening with tariffs is that you're declining global economic growth, and global economic growth has, you know, really run this since the 1980s. So there's a lot of missing factors in there. Again, we talked about gold as an insurance policy. It's a great insurance policy. The second, though, is income. If you can have income in your portfolio, you'll get that anticipated return. We call it the bird in the hand, as opposed to the bird in the growth bush. So it's a great place to be defensive while you're riding through this. You get paid while you wait.
Lyle, it was great to have you here. Thanks a lot for stopping by.
Thanks, Paul.
Lyle Stein is president of Forvest